So when it comes to the week ahead, it's really about central bank decisions, but let's not get ahead of ourselves. Let's start with economic data. And in this case, we did get a string of Chinese data this morning, an impressive beat when it comes to retail as well as industrial production. We are going to get Empire's manufacturing out of the US, which is expected to show improvement later today, as well as expected improvement for tomorrow's ZEW economic sentiment figures for both the Eurozone and its manufacturing powerhouse, Germany. For the US, though, when it comes to economic data, the big one's really tomorrow's retail data. And that's because last time around, we had a big increase, which was on the back of increased stimulus. Now, the stimulus is on the way, or I should say increased stimulus is on the way, but that means that future readings are expected to improve. This one, though, maybe it's expected to show just a slight improvement. On Wednesday, we're going to get some low to mid impacting items. We do have some housing data, as well as those retrading oil EIA's oil inventories reading for the US. We have been seeing some significant surplus after what had been successive drawdowns prior, but the expectations are we did get a significant drawdown when it comes to gasoline stocks last week. So this time around, we're expecting that those big green numbers may become a rare occurrence. And on Thursday, we do have employment data, not just out of Australia, but it's the usual Thursday weekly unemployment claims for the US. Expectations are for another move lower to about 700,000. And on Friday, we've got Australian and Canadian retail, as well as Baker Hughes oil rig count, the number of active oil rigs for the US dropping by 1 to 402. So economic data out of the way, let's get into where the action is really expected to be, and that's when it comes to central bank decisions. And significant ones this week, probably the biggest one, starts off on Wednesday with the US Federal Reserve. No changes expected to its monetary policy, neither its rates, nor when it comes to asset purchases. However, there's going to be economic projections expected to be raised given the vaccine distribution as well as economic reopening expectations. And there's also the question, it may not happen on that specific day, but whether or not they're going to extend or expire the supplemental leverage ratio, which will have an effect on the bond market. And let's face it, all eyes right now are on the bond market and what has been rising long-term US yields. On Thursday, Bank of England's turn, so you can expect the pound to get a little bit jumpy, though probably not as volatile as that as the Turkish lira. And that's because the Turkish central bank is expected, according to the market, to raise rates by about 1%. So whether they live up to those expectations or fail to, you could expect the Turkish lira to get quite volatile. And on Friday, it's the Bank of Japan's turn. This is the one that pioneered the yield curve control program. And as of late, though, it's been a case of how much they're going to let that 10-year bond yield target band sort of oscillate, to what extent they're going to let it oscillate. So probably hear more from them on Friday. And finally, just a couple of events. We do have tomorrow a 20-year bond auction. Last week, though, the focus was really on bond auctions, but the 3, the 10, and the 30-year for the US showed decent demand, so not really expected to be as significant a factor this week. We also have high-level US-China talks on Thursday. This is following the virtual Quad meeting last Friday of the leaders of US, Japan, Australia, and India.